Hi everybody, this is Lara at Elliott Wave Gold with your end of the week video analysis for the US oil market for the trading week ending Friday the 13th of July. I'm still expecting a downward swing to continue here to about 61.22. I expect a deeper and longer lasting consolidation has begun underway for US oil within an ongoing larger upward trend. I expect this consolidation to last about 13 to 21 weeks in total. So far, I think it's only been 7, and it should remain above 55.24. It may end about 61.12. It won't move in a straight line. There will be swings from resistance to support and back again, and those swings may be very choppy and overlapping. Let's have a look at the Elliott wave count first. Classic analysis last this week for oil. This is my only remaining wave count at the monthly chart level. I had a bearish alternate for US oil, which has been invalidated with a new high slightly above this low back here. And so this is now the only wave count that's left. So by a simple process of elimination, my wave count for oil is now very bullish. I expect that from this high to this low, US oil completed a huge three-wave movement, a zigzag subdividing 5, 3, 5, and I'm labelling Grand Supercycle Wave 2. Cycle Wave B here is a zigzag with A, B, C, and B is an unusual 9-wave triangle. This meets all Elliott wave rules. Primary Wave C is not truncated. It has moved beyond the end of Primary A. It doesn't need to move beyond the price extreme of Primary B in order to avoid a truncation. So apart from the 9-wave triangle in this wave count, all other waves are labelled with most common tendencies for this commodity. Cycle wave B ends here and C begins here. It's a 5-wave impulse, 1, 2, 3, 4, 5, with a swift and strong 5th wave and a couple of very, very bullish long lower wicks on the monthly chart down to this low here. We've got a morning doji star at the low here at the monthly chart level. That's a very bullish bullish candlestick reversal pattern, and at the monthly chart level that's very bullish, and since then oil's been trending on upward, and so I'd be expecting a 5-wave impulse to unfold now at the monthly chart level for the first wave up, and I'm going to label that cycle wave 1. It's not unfolding so far as a leading diagonal, and that's much less common. It looks like it's unfolding as an impulse because there isn't much overlapping. And so far, I expect we have 1, 2, and primary 3 incomplete. When it's complete, I'll expect it to look like a 5-wave impulse at the monthly chart level. So far, we have intermediate 1, 2, 3. Looks like it was actually over here. When I look at it at the daily chart level, it looks like 4 is now underway and should last a little bit longer, so that it has reasonable proportion with intermediate wave 2, and it's the proportion between the 2nd and 4th waves within an impulse that give an impulse what we call the right look. When 4 is done, I'll expect the next wave up to new highs to complete intermediate 5 to end the impulse of primary wave 3. Once that 5th wave is complete, we'll then have another multi-month consolidation. Primary wave 4, counterpart to primary wave 2, should also show up at the monthly chart level so that the wave count has the right look, and then a final 5th wave up to end cycle wave 1. Oil, very typical of commodities, often exhibits very swift, strong 5th waves, and that tendency is especially prevalent in its 5th waves to end its 3rd wave impulses. And so when we move into intermediate wave 5, I'll be looking for a blow-off top and a steep vertical upward movement, possibly to end primary wave 3, but we're not there yet. Now we're looking at the structure of intermediate wave 4 and looking for it to be complete. Let's take a look at the weekly chart. We were going to look at all of this movement from the low down here, the end of supercycle 2. Here's primary 1, primary 2 a zigzag, primary 3 incomplete. It's very close now to 1.618, or I think it's past 1.618, the length of primary 1. So I'm now using the next Fibonacci ratio in the sequence to calculate a target for it. Primary 3 will equal 2.618 times the length of primary 1 at 106.25. Primary 3 may only subdivide as an impulse. We have an impulse for intermediate 1, a deep double zigzag for intermediate 2, an impulse for intermediate 3 exhibits no Fibonacci ratio to intermediate 1, but it is longer than 1.618, the length of 1. Looking now for the completion of a corrective structure for intermediate 4, which may not move into intermediate wave 1 price territory. Intermediate 1 has its price extreme at the end here at 55.24. Intermediate wave 1 is an impulse. It has 1, a flat for 2, impulse for 3, running contracting triangle for 4, and a short little fifth wave. The fifth wave has moved beyond the end of the third wave, and I've got the labelling here from the daily chart, and I've checked subdivisions at the hourly chart level. Minor wave 5 here does move beyond the end of minor 3. Now this is the same situation that we see on the monthly chart. There's no truncation here. Minor 5 only needs to move beyond the end of minor 3 to avoid a truncation, but because minor 4 is a running triangle where B moves beyond the start of A, minor 5 hasn't managed to move beyond the price extreme of minor 4. That does not mean it's truncated, and so that doesn't reduce the probability of this wave count. And running triangles are not rare at all. They're reasonably common, not the most common type, but they are not rare by any means. Intermediate wave 2 here is a double zigzag, and again I've checked these subdivisions at the daily and down to hourly chart level, and so intermediate 4 is likely to exhibit alternation with intermediate 2, so it's least likely to be a multiple zigzag. It's most likely to be a sideways kind of corrective structure like a flat combination or triangle. Let's take a look at how this may be unfolding at the daily chart level, where intermediate 3 is this high up here. From this high to this low we have a zigzag, and from here to here we have a complete expanded flat. From this high to this low, it's not possible to count this movement as one complete Elliott wave structure down to this low. There is no Elliott wave structure that will fit there and meet all Elliott wave rules, but it works very well indeed if we have a zigzag and then a flat, and expanded flat corrections, particularly for B waves, are extremely common. B waves are very, very commonly flat corrections. So if we have a zigzag, a flat, then we could have A, B, C of a flat correction unfolding for intermediate 4. We could have A, B, C to end somewhere about here of a triangle for intermediate 4, or we could have W, X, Y of a combination for intermediate 4. At this stage, all of those ideas would expect some more downward movement. Only in another week or so will they start to diverge, and then I'll separate them out onto different charts. And for now, let's just expect overall downward movement next week for intermediate 4 to continue this downward swing within either a flat, combination or triangle. Within a flat correction, the B wave has a common range of from 1 to 1.38 times the length of the A wave. That's from 72.9 to 75.68. B waves within flats, specifically expanded flats, do move beyond the start of the A wave, and expanded flats are actually reasonably common structures, and so the new high above this price point certainly looks like it's part of intermediate wave 4 still, and follows quite a common pattern. So there's no problem with this wave count in respect to this high being higher, to this new high here being above this prior point here. Here, I think minor wave B is now a 1.27 length of minor wave A, so it's well within that common range of from 1 to 1.38. The only difference now in terms of expected structure is how the downward wave will unfold. All of my 3 ideas for intermediate 4 for a flat, a combination or a triangle all need some more downward movement next week. So probably after next week I'll start to publish 3 different daily charts for those 3 different ideas. At this stage I'm still expecting that we're seeing a big consolidation, a swing from resistance to support to resistance, another swing down now to support, probably to test about this area, maybe to move a little bit below. If intermediate 4 is unfolding as a flat correction, which is a very, very common structure, which is why I've calculated a target here, then it would most likely be an expanded flat 335, and minor wave C would reach 1.618, the length of minor A, at 61.22. That would see intermediate 4 reach down to 0.382 times the length of intermediate 3 at 61.12. So we've got a small target zone calculated at 2 degrees, which has a reasonable probability. Now, if that target zone is wrong, it may be a little bit too low. If intermediate 4 is a triangle, then minor C will end well short of that point. At the daily chart level, I've moved everything here down 1 degree. We have to consider the possibility that intermediate 4 could be an even longer lasting flat or combination. I'm going to label it here a possible combination, with an expanded flat for minor wave W, 335, to continue down lower. The target's pretty much the same, and then would have an X wave to join the two structures in a combination, and then we may have another flat for a double flat, or most likely a zigzag for a double combination for intermediate 4. At this stage, it's only the degree of labelling that changes between the two wave counts at this stage, so I'm going to consider both degrees of labelling. As soon as we can see a corrective structure possibly complete at the next low for intermediate 4, it could possibly be over as per that first labelling on that first daily chart. And if the structure is complete, we could possibly have an end and to the downward movement and consolidation and the start of a new upward trend. We will have to look at that possibility. If it looks right in terms of proportion on the weekly and monthly charts, then I will consider the strength of the start of the next upward movement and how that looks to try and determine if the consolidation for this fourth wave could then be over. So I'll be relying quite heavily on classic technical analysis at that point. Let's take a look at that classic analysis. There's nothing new to say for the monthly chart because the month of July is still unfolding. The last month for June has a bullish long lower wick, but it had some decline in volume. MACD full ball bullish, and there was some short-term bearish divergence at the monthly chart between price and on-balance volume at this high for last month up here. So that all supported the idea of some sideways consolidating movement or possibly a trend change, but we can't tell that yet. But what I do want to draw your attention to here is this very strong, clear and long-term bullish divergence between price and on-balance volume. Price has made new highs back here, but on-balance volume did not. Price did not make new highs, but on-balance volume did make new highs. Read on-balance volume as a leading indicator. Where it goes, price may follow. As it's making new highs, expect price is very likely to follow on through. This divergence is very clear, very strong, over a reasonable time frame, and it is very, very bullish and offers quite a lot of support to the main wave count at the monthly chart level. What about the short-term picture for the last week? I'd expected some downward movement. We're getting that. Wednesday was a good strong downward day. These two small range days look like a small breather within an ongoing downward swing. At the highs here, price reached resistance and stochastics reached overbought. ADX is telling us that we do not have a trend anymore. It's declining and the DX lines are starting to whipsaw. That's happened after the previous trend reached extreme for upward movement. And so when ADX tells us the market is consolidating, then we can expect swings from resistance to support and back again, and we can use stochastics in conjunction with resistance and support to try and help pick when one swing ends and the next begins. Here, price was up about resistance just above 75. Let's look for support back again now in this really strong zone of support just above 64. If price gets down to support and stochastics reaches oversold, then we can look for an end to the downward swing and the next upward swing. And particularly if price is at support and stochastics reaches oversold and exhibits some bullish divergence with price, then that would be a strong indicator of an end to the downward swing. And so for now, let's expect the continuation overall of a downward swing. Do not expect it to move in a straight line. When price is consolidating, those swings can be very choppy and overlapping, which is why it's so one reason why it's so difficult to make a profit in a consolidating market. But these are pretty big swings, lasting a couple of weeks or more. For the short term, there's more support for recent downward days than upward. That supports the idea that there's more support here for downward movement, and so we should expect it's likely to continue. We've already gone over ADX. Here's a new small zone for on-balance volume with resistance and support. It's going to have to break out of here pretty soon. If it breaks above resistance, expect an upward chop within the downward swing. If it breaks below support, have more confidence in this downward swing. RSI is neutral, plenty of room for price to rise or fall. As is stochastics, it's nowhere near oversold yet. Bollinger Band starting to contract as price moves sideways for the last couple of days. This looks like a small counter-trend movement within an ongoing downward swing. That's all from me at the end of the week with your oil analysis, and I hope all of our members are having a most fabulous weekend.